I am so stoked to be giving you guys this earnings update, okay? For SoFi Q2 earnings, it was an absolute home run, baby. I'm stoked, okay? We saw members go up to 450,000 new members, products up 700,000, and the highest cross-buying volumes that we have ever seen in a quarter. We're gonna jump into every intricate detail that we have available to us right now. The 10Q has yet to come out, but that'll be coming out next week, and you're damn well sure that I'm gonna be covering that as well, because that's when we get into the really juicy details that I love to show for you guys. And just with a couple more numbers, revenue hit a new top, okay? $356 million, which was up 11% quarter over quarter and 50% year over year, hitting a new record, seeing strength in all three business models. That's technology platform, lending, and financial services. So we're going to go through all three of those to sort of show some of the more intricate details that we want to see and hopefully get you guys some more information for your investments into SoFi Technologies. So starting off with lending, we have $251 million worth of revenue in this segment, which is by far our biggest segment, okay? That was up 46% year over year, or whenever it comes to the amount of lending products, 1.2 million total, we saw a 22% increase year over year. Outstanding, some of the fastest growing that we've had in our lending segment. And you have to remember, that's our biggest segment. So this is super important. Most of that growth is actually coming from our personal loan business, which is growing outstandingly quick and by far the highest interest rate that we have out of any of our other products. And now because we're a nationally chartered bank, we can actually have lower cost of funding on our loans because we can use our own deposits from our financial services side of the business, right? With people that have checking and savings with us, right? And now that means that we can do one of two things. We can either offer our loans so cheap that we can beat out all the other competitors and still afford to do so, or we can offer exactly what they're offering but still keep a higher amount of profitability because we fund our own loans. Anthony Noto actually went very in depth with this on the earnings call, talking about how we actually saved ourselves around 100 basis points, okay? That's 1% of the amount of cost to our loans if we were using before our warehouse facilities or like a corporate credit card versus actually just funding it with deposits. See, deposits are not free because we still have to give our members that 1.8% interest rate. So that costs us money to actually fund those loans, but it's much cheaper than the 2.8% that we'd be getting on our warehouse facilities. That new 1% is what we get to keep, and it's a lot whenever you're starting to play in the billions of dollars worth of loans. And even if we're growing a personal loan business higher than the amount that we actually have in deposits, we still have $5.5 billion worth of book equity and $7 billion of warehouse facilities to back our loans onto because there still is that amount of profitability. Even if there's an average of 2.8% to actually charge for those warehouse facilities, we still are getting around 11.6% for our personal loans on average. Also, another thing that's demonstrated with this new bank charter is the fact that we're able to hold these loans longer before we actually sell them off, which showed a doubling in the amount of interest income that we earned on our lending side of this platform. And speaking of our personal loan business, we saw growth of 91% whenever it came to our volumes in our personal loan business, up to $2.5 billion. Now, it's not all sunshine and rainbows whenever it comes to like our home loan and student loan originations, where the amount of volume is actually down around 50% year over year, just because we're seeing so many headwinds in this type of macro environment. There's just not as many people buying homes right now, plus because we still have federal student loan pauses that we're not seeing a lot of new clients, so people are just continuously paying down their loans with SoFi, and we're not making any new ones, so the originations are just, collapsing. However, on the bright side, even though we're picking up so much whenever it comes to our personal loan segment, we're still seeing average incomes of $160,000 on average, with FICO scores of over 748 points. That's still amazingly high credit scores to be going after, considering how fast we're growing the business. And whenever compared to last quarter, this is even better than what I expected. I expected credit scores to fall because as we expand to a more broader audience, we're going to have to go towards more of a national average whenever it comes to credit score. But no, somehow, out of the blue, SoFi is able to find these clients that are actually having higher credit scores than what we had last quarter. So exciting. We're getting safer while still bringing in more money, still higher originations and higher earnings. And whenever it comes to loan loss, we still only saw around 8%, which is practically the same of every single quarter since we've been tracking it. Whenever it comes to net revenues on our financial services segment, we saw around $30 million, okay? That was up 30% quarter over quarter, or even 78% year over year. Still very exciting, nowhere near our loan platforms, okay? But it's still growing very quickly. The financial services segment continues to be the cross-buying hub of SoFi. Whenever people are signing up for SoFi Money, Money, they actually have the lowest customer acquisition cost than anywhere else in the business. So if you can get them on by signing up for SoFi Money and you can pay them a $15 to $20 fee and then cross-sell them over to a personal loan where we can make thousands of dollars, it's a very cheap customer acquisition cost versus something like a $300 or $600 sign up for a personal loan business. We now have over 1.8 million accounts on SoFi Money, which is actually bringing out that top of funnel growth, okay? So that's where we really get people in and then start to shape them down into where we make money, which is sort of the closer products like, personal loans. And I don't even really like the way I said that because that might make you think that we're not making money on SoFi Money. And the truth is we absolutely are. Now, the reason why we're not hitting profitability is because we're growing so freaking quickly. We continue to have these large acquisition costs because we're growing at 92% year over year. But those customers that have been with us for multiple years, those low-end cohorts have been with us and now they're doing direct deposit and they've been spending the entire time. And then we can use those loans to actually fund our personal loan business. So all of it helps the big chain reaction to actually lead us to profitability. There's a very important statistic whenever it comes to banking, and that's lifetime value of a customer. So the earlier we can get them in, the longer they can actually be with us to continue spending and living their lives through our bank. The more we can actually bring in fees and all these types of things that actually pay for their expenses. Then, the cross-selling is just the extra cream on top that helps pay for them in the meantime. And speaking of the more that they spend, spending has gone up dramatically, where Anthony Noto actually says that spending on the SoFi platform is up 29% quarter over quarter. And funny enough, I thought this was such a cool tidbit. This is sort of information that Anthony Noto and the team has discovered through raising their interest rates at SoFi Bank, is the fact that the higher they raise the interest rate, the higher the credit score for the clients that actually sign up for the bank. I guess the more you can actually offer someone, to increase their pennies and dollars within their account, you're going to get the same frugal client that also really takes care of their credit score and pays their bills on time. This is probably also why our personal loan business has also seen increases in their credit profile, is because we're cross-selling them from this new way of increasing, interest rates and getting them through SoFi Money. So interesting. The next piece of information is super exciting. It comes from Anthony Noto again from that same earnings call. He says, so the aggregation of more money members with higher credit profiles and more direct deposits is really positive. Once we have the direct deposit, we know what types of bills they have. We know if they're overextended with credit card payments, student loan payments, or mortgage payments. So it's a treasure of information that helps us serve them much better. Now, this is so cool because the more data that we have, the better we can actually serve these clients. If we know that specific client is having problems with these types of debt issues, then we can actually show them, debt consolidation products that they might want to use thereafter. So we can sort of service these clients the more we have more direct deposit clients, and that seems to be on a really high trend right now because we have that 1.8% offering. Speaking of the amount of money that we're bringing in from direct deposits, it's around $2.7 billion, which is growing still at around $100 million per week. 80% of that overall $2.7 billion is from direct deposit users. So that's really, really exciting. Deposits are actually up over 135% quarter over quarter. So it's really going to help us bring down the cost of our loans really quickly. Hopefully Q3 even shows that to be even stronger. Anthony Noto's got another great quote in here. He said, it took us 3 years to accumulate our first $1 billion of deposits and then just 3 more months to grow another 1.6 billion. Wow. Now, for the final segment, this is the technology platform segment. This is Galileo and Technisys. The tech platform brought in around $84 million worth of net revenue, which was actually up around 85% year over year. Now, that's a little bit of a spike in numbers because we brought in Technisys, okay? Without Technisys, it's around 39% year over year whenever you're just including Galileo. Now, whenever we're just talking about Galileo and we're talking about the amount of account growth, we're still seeing around 48% year over year growth whenever it comes to the amount of new accounts. Now, I want to talk about comparing this to last quarter, okay? Last quarter, we saw 58% account growth and 32% revenue growth. Now we're seeing 48% account growth, which is much lower, but then 39% revenue growth, which is much higher. So hopefully this actually means that we're seeing a higher average revenue per user whenever it comes to the amount of accounts that we have. Anthony Noto also notes that there's many more transactions this quarter per person, so that's actually helping bring up that average revenue. Another really cool piece of information, I'm glad that we have it, but I don't know if it's good or bad. And that's the fact that Anthony Noto actually talks about our Galileo purchases whenever it comes to our transaction revenues is actually a fixed cost. So whether if you're buying a car or you're buying a stick of gum, we charge the exact same amount whenever it comes to our actual platform costs. I mean, maybe it's good. I haven't really done the math on which one would work better, and I don't know the industry rates, but to me, I just, going into an inflationary environment or being in one, I would want it to actually be a percentage of the actual charge so then we can take an equivalent amount as those fees start to rise. Now, I mean, if anyone is talking about Galileo and not talking about this B2B conversation that Anthony Noto had, oh my God, I don't know what you're doing with your time, okay? Galileo is talking about adding new B2B or business to business capabilities for their business. They added 12 new clients, 8 of which were B2B clients. So this is a big source of new revenue for us. Like, we're really focusing on this B2B section. Anthony Noto estimates that the average amount of money that is traveling through the B2B business is around $29 trillion per year, okay? 29 trillion. Now, if we charge a 1% fee in terms of interchange fees, that's a $290 billion business if we have every single client. Now, obviously, that's not what he's saying here. He's just saying that that's the total addressable market. What he also brought up, however, is the fact that 50% of that information is still going through virtual checks or even worse off, platforms. If we can actually get to some of these older businesses, as time rises, we are going to be on the good side of innovation, of the good side of technology, where these businesses are actually going to be transitioning over to smarter, tech stacks, and hopefully they choose Galileo and Technisys, considering no one can offer what we offer. Now, whenever it comes to miscellaneous news, which just has to do with SoFi in general, was the fact that Anthony Noto actually brought up that Q3 has had a very positive start. So hopefully that's great, right? Because whenever this earnings call came out in August, right? August 2nd, that means that July could have been an amazing month for them, and hopefully that's a great start to a new quarter. Now, we still did exit the quarter with over $1.6 billion that was actually drawn off of our warehouse facilities, but this was down from $2.7 billion from last year. So this is where we're starting to actually use some of our own cash, because we're still growing on our origination side, but we're actually using our own cash, which is saving us that 100 basis points that we spoke about earlier. But now let's actually go on to actually show you an Excel spreadsheet here, for which I made this. I actually showed off in my last video, but this is all the products that SoFi has to offer, okay? So this is all the totals that they have, and then every single one of the products that they have individually, okay? Now, these are all the correct numbers whenever it comes to Q2. So these are the numbers that we're going to be focusing on, and then talk about, their year-over-year growth, or quarter-over-quarter, and everything in between. Now, I'm aware that this sort of just looks like number soup. It's way too much information to take in all in one time, so come back to the video if you need to at a later time. But for now, let's just look at some of these numbers that I think are very interesting to me. So whenever we look at personal loans, you can actually see that the growth has been accelerating. You can see it from the spark line right here. Now 8.7% up just this quarter, just quarter over quarter. This is massive growth in our personal loans, and we're gonna have to wait for the financial statement to see how much the actual interest rate has gone up and potential interest that we could earn from these products. But knowing how fast we're actually growing in this segment is just incredible. Another really interesting number, from which my last video that I said was quite interesting, was the at work segment, okay? This one, once again, huge numbers whenever it comes to at work. It's growing really, really fast. So that could be a huge segment for us going forward, okay? Referred loans, this is sort of what I said. I even said the number would be even lower. I said closer to 30%. It was 60%. So very, very exciting. But we are starting to see full quarters of growth whenever it comes to referred loans. But I kind of had a feeling it might outperform, because Pagaya has been outperforming. So, that's sort of our Pagaya side of the business, is this segment right here. And it is so fresh. So we only have 3 quarters of actual growth. And the first quarter wasn't even a full quarter. It was like a month and a half. But credit cards is really where I see the disappointment. This one I'm actually quite shocked about, because this is where, and now I'm not looking at the percentages, because the percentages get harder to achieve the bigger the number gets, right? Because the individual quarters, like this is 22,000 new credit cards that we've given out just this quarter. Now that is exciting, but it's all cumulative, right? So it's going to get better and better for us each quarter, because every person that had a credit card from Q2 2021 is still using them today. So it's all cumulative. That's why I'm still not excited, or I'm not worried that we're slowly, getting slower growth, but the amount of overall credit card that are added, I still would have wanted around 2,000 to 3,000 more credit cards for me to suffice for this quarter, especially knowing how many new members that we put on. Like, so many new members. You should be cross-buying into credit cards, especially that we offer 3% on these credit cards. I can't believe how low that number is. Overall, however, my predictions were almost spot on. Whenever it came to loans, we actually absolutely dominated. Whenever you looked at all the other banks, that's exactly what happened. Now, spending was also another thing that I said. Spending, for all the banks across the board, said they had great spending levels. I said spending was going to dominate. We saw 29% quarter over quarter. No other bank did that. Like, SoFi is really competing with these big banks, and we're taking larger and larger market share every single quarter, and I'm so excited to be a part of it. But now I need you guys to do me a favor. If you guys have watched this far into the video, I need you guys to hit the like and subscribe down below if you want to see more financial content just like this.